Thank you very much for all your input. So we are down to our final question. NASDAQ 100 is at an all-time high. Is it too late to come in?
Is it too late to come in for Nasdaq? At the current levels right now, Nasdaq is trading at 28 times PE, price earnings, and I feel the question should be: are the earnings level at that sustainable level? And when we talk about Nasdaq, we're talking about Facebook, Amazon's, Google, very transformative companies. And when we look back to what Warren Buffett said, it's usually about, will these companies keep their business modes? Is this sustainable? So yes, it may not be too late. It is quite high right now, but in terms of the business models, business earnings, its sustainability, it is quite still strong. Especially if we look at the likes of Amazon, most of their sales are in domestic U.S. markets. And when you look at the previous week's earnings, it was very, very strong. So short answer is it may not be too late. It is quite a good time to enter right now, especially with the uncertainties for NASDAQ 100.
And I think for me, just to add to that, answer, uh, these questions are all have to be answered in a certain context. So, whoever is asking this question, or whoever you're representing a customer's concern. So my question back to the customer is, what are the other options that he or she has? And are those options going to be better than the US NASDAQ? And that's where, even if you feel that, oh, the NASDAQ or our own funds which are invested in the US equities have generated returns on a 30% or at a very high level, is that sustainable? I would question that. Is that sustainable over a long period of time? I would say no. But even if it gives a lesser than 30% or 20% return, it's still much better than some of the other asset classes where your money is lying, right? So a lot of our customers' money is lying in bank accounts. So my question is, what are you comparing it with? So if you're asking that question, what are the other options that you have? Whenever you go out in the market and you try to buy something, you always are saying, is this worth in comparison to the other options, right? So the question that you need to ask the customer back is, what are the other options that the customer is evaluating this particular asset class against? And then in that comparison, is this asset class worth it or not? That's how you should be answering that, that question. But in absolute terms, whether, the return that the market has been able to generate, the US market has been able to generate over the last 1 year, is it sustainable over a very long period of time? Of course not, So it was a very good year, might not be sustainable. But again, as an asset class, it continues to be attractive as compared to many other asset classes which the customer might be invested in. Yep. So I think that's a better way of having that discussion with the customer, rather than just looking at the absolute return of an asset class in 2020 or in 2021 versus what it has generated for the customer in 2019.
Guys, I hope you don't mind, but I know I said that the last question would be the last. However, I think we still have time for more. Okay, so our next question is, for our asset master investors who came in when the PSI was at 8.5 or above, what options can we offer them since top-ups are not allowed for the asset master? And how does AXA handle offshore funds? Do we switch? Are we invested in Tesla? I think that's it.
Should we go with the asset master question first? Okay.
That question has two parts of it. One is a product question, the other one is a market question. Right. Richard, would you like to take on the market question?
The market question. All right. When you entered at 8,000.
Yeah, one time.
Or above. I'm sure a lot of our clients invested at basically at the peak.
I'll take the first shot at that. Okay.
Sure.
Okay. See, for me, again, any particular investment that any customer does, you have to have a discussion with the customer on a portfolio basis. Okay, you can never have a discussion, or you or your customers can never expect that every asset class that you invest in at any given time will give you a positive return. Okay, it will never happen. It is impossible, and it has never happened. And anybody who has that expectations as having wrong expectations. So first of all, let's get that straight. Second, if you're looking at your portfolio and you're always evaluating it on a portfolio basis, then what you should be looking at is, you have to look at a portfolio target, return along with the customer. Now, what do I mean by that? Within the portfolio, if you have a asset master kind of a product where you have invested 8,500 at that level, I would say stay invested. If there is no reason for you to get your money out, if there is no such emergency situation, then you will have to stay invested in that particular product for a much longer period of time as you had initially expected. And then whenever the market goes beyond, you might choose to take it out, or you might choose to stay invested even beyond that particular time. But in the future, you will see that asset class or that particular product giving you a positive return. Because as we shared earlier, this particular product is invested, I would assume, in the Philippine stock market, and that's why you're comparing it the 8,500 PSEI level. And in the long run, PSEI will always move forward because of the the fundamentals being strong is what you're talking about. In these times, and that's why I said in my earlier statement that if somebody's invested in an asset class and he's looking at investing more, you don't go back necessarily to the same asset class and invest more. Make him invest in other products so that you're building his portfolio, which is more diverse. And by building a diverse portfolio, that's the only way you can, on a long term period, generate positive returns for the customer on a portfolio basis. So always look at it on a portfolio basis. A lot of customers are also investors in property. And it exactly works in the same way. There are a lot of property decisions or purchase decisions which don't work out fine, especially if customers are very, they invest in property a lot. They purchase different properties, and different properties that they purchase generate different kind of returns for the customer. And sometimes a property investment actually goes sour. The property investment does not generate the return for the customer as he had expected. So when you're looking at property, you always again look at property as a portfolio and not at every individual property investment giving a positive return. So the discussion and your expectations that you're generating with the customer should always be, the discussion should be around portfolio, and hence stay invested in products or in asset classes which have not made you the return that you would have expected. Don't cash out, because then you are converting a paper loss into an actual loss. And especially in the case of Philippine equity, where we've already shared it's fundamentally very strong, please stay invested and ensure that you're able to get out of the asset class only when it has given you some positive return.
Mhm. Yeah, and also elaborating on the cost averaging strategy that was shared earlier. While the sad part of not being able to do a top up, you could always offer the customer to get another asset master policy. And
Cost
again,
averaging.
cost averaging is an effective way. And aside from the cost averaging strategy, highlight the fact that what is the main difference of an asset master investment as opposed to other investments? It's the insurance component. It is an insurance vehicle that effectively what you put in there is carved out from your estate. And that is a very good proposition worth sharing to the customer, so that in doing that, you are now turning the mindset of, let's say, a customer who is more of short-term investor to a longer-term investor, because that is his long-term investment, that it's not just for him, but rather for the children or the children's children.
And I'll give you a practical calculation or an example on, cost averaging that we talked about. So just by simple example of 8,500 that the customer bought the PSEI at, Now the market, if goes down to 7,200 and you made him invest in at that level, almost the same amount of money that he invested when the market was at 8,500. Now your portfolio price at which you have acquired that asset class is 7,000, is an average of 7,200 and 8,500, which is about 7,850. And the moment the market crosses the 7,850 mark, his entire portfolio is positive. And that's how you show him. And that's where, that's where the discussion has to be of what we all told you. It has to be around portfolio and not every time in a particular asset class and what time did you buy it. And you do the cost averaging, especially when the market is down. You invest more. Yes, there is no top up, but buy a new asset master. And then you go back to the customer and show him the calculation that, look, now your average acquisition cost is now 7,850 and you are now positive in your overall portfolio because you were able to purchase the same asset class when it was at a discounted price of 7.2 or 7.3 or 7.4. And I think that's where all the concepts that we're talking about as a financial advisor, you need to put them all together and have that discussion with your customers.
Basically, what he's saying is let's take advantage of buying things at a discount.
Yeah. And I would just share with you the behavior. You made the customer buy at 8,500. The market is at 7,200. The problem is the distributor doesn't want to go back to the customer. They don't want to show their face to the customer because they are worried about a very difficult discussion that what has happened to my money? It was at 8,500. Now is it at 7,200? But for me, this is exactly why you should show yourself to the distributor, to the customer again. You need to make your appointment again and say, we bought it at 8,500. Now is it at 7,200? We need to buy more.
Exactly.
But the typical behavior that we see of the distributors is they don't pick up the phones of the customer. They hide themselves against the customers and they don't want to see their customers again because the market has dropped. But that is not exactly how you should be behaving. That is not how a good financial advisor deals with the customers. And in fact, you should go back and show him that this is the opportunity to buy more.
I think just to add to that, it's also very important to maintain great relationships with your clients. As an ex-private banker, it always helps to sell the relationship and not just the product. So whether the client is making money or losing money, they'll always stick to you no matter what. So do we have any more questions? Will we open the Global Dynamic Allocation Funds to our Philippine investors?
Can you answer?
Go ahead.
Yes, there will be a peso version of our offshore funds, and one set would be our Global Dynamic Allocation Funds. It's in the works. It's something to look forward to, right, Richard?
Expecting to launch it?
Yes, expecting to launch it between second quarter of this year. So that enables your peso customers or your customers with peso policies to diversify their portfolio from just local investments to global investments by either just doing a top up or switch some parts of it, but of course preferably with top ups.
So second quarter we would be having the peso version of the global funds. So you will have an opportunity for making your customers who have peso funds in pesos to easily invest in those products. But even at this point in time, I would share with you that it's extremely easy to buy dollars. If you are really go into a bank, I don't even think you should wait for the second quarter. You should easily be able to provide that service to your customers that he can buy dollars. Extremely easy. I'm not personally, I'm not a currency expert, but some of the currency experts are saying that the dollar will appreciate versus peso towards the end of this year or going forward. And hence, at this point of time, purchase of dollars can give a double benefit to the customer. The appreciation of dollar itself, and of course, the asset classes are also, the return on the asset class will also be a positive advantage. So please don't wait for the peso version of these products to come in. Just reach out to the bank of the customer, and it's extremely easy to buy dollars. Get into that process, and then have your investments done in our GDAF or in our GAF funds. So I mean that's how easy it is. So you don't even have to wait for it. But yes, we will come out with that version in the second quarter of this year.
I think we're down to our last question. Any more questions from the viewers that are online? Okay, so our very last question. What things can we look forward to in terms of investments for our clients? I think we can just further expound on what Rahul spoke about earlier. Like he said, we will be having more access to funds. Maybe we can talk a little more on that before we come to a close.
Great.
Okay, I guess next year will be the one.
Look forward for the year.
Well, I look forward for the year in terms of
Yes.
investments for our clients.
We have new funds,
All right.
new products.
Okay. Yeah. All right. To expound on that and connected to the earlier question. So we've been working for that peso version of our global funds on Q2, and the whole idea there is that even with your peso policy, you can now invest globally. May it be your RP product or your current SP product. You do a top up, and you don't have to buy a dollar policy and go through the underwriting process, and you can readily diversify your investments to global funds. So that introduces another opportunity for our local investors to be invested globally. And let's face it, for the past 5 years, the challenge with the local equities market is that it has just been registering between 6 to 8% per annum. But they're missing out on opportunities globally. So that now is open once we get to launch our peso version of our global funds. That opportunity to invest globally will be open to our peso policy holders. Richard?
Actually, to add to the point of Rahul and Dexter a while ago, if we look at the client's portfolio, the entire portfolio, especially if they're invested in the local equities, it's mostly on the PSEI. With this future offering, we can then add more building blocks into their portfolios. And we're talking about not just a global exposure, but also exposure to the biggest US tech companies. And I think that's a very good growth proposition for our clients who are very interested in growing their investments. Because when we're talking about investment, we're not just talking about these ticker names, we're talking about businesses. And these businesses actually are the ones in our pockets, smartphones, the ones that we use to search for information. Data and consumer electronics are the way to the future. And when you're investing to the future, might as well you invest for the companies with the stories that you believe in. So I think it's worth mentioning that, yes, we'll be growing our fund portfolios to include global funds into our peso policies. But it's more important to look at what are their stories? What are we looking out for?
Yeah. I think if you ask me in between, we have enough funds for our local Philippine markets, and then after that, with the launch of GAF and GDAF, we are through our products and through our funds, we have actually provided a very, very wide range of asset classes for our customers already. Because each one of these funds that we have, whether it's local or global, has all the versions of equity, balanced, and debt funds. So within each of these three funds, you have these three subcategories. So if you look at the entire range that we have today available for the customers, it is quite significant. Okay, there are a couple of opportunities which we still have, and that is, the peso version of the GAP and the GDAP. We are also looking at target dated funds because that allows the customer to align the investment strategy to the horizon of his of his objective for which he or she is trying to invest in. And of course, real estate funds is something which is coming up. So we will be looking at, real estate as an asset class through the funds that we invest in. But beyond these couple of other new funds that you would be or should be looking forward for, I think we have a lot. And what, as a financial advisor, you should do is now is start making the customer choose the funds based on his objectives, based on his investment objectives. And different investment objectives makes different funds suitable for him. If I have a very long term retirement objective, and if I am still young, and you know that the investment horizon is quite long because the age of the investor is young and the retirement is many years away from it, it has to be equity, because equity over a longer period of time gives the best return as an asset class. If you're looking at a shorter horizon, I would suggest go in the same fund, go for a balanced kind of a approach, so that you're not exposing the customer to any high risks, and especially if the person is much older, closer to the retirement, and the objective of his investment is still retirement. So depending on the objective of the customer, there is more than enough that we have to position our funds in a certain way. And for the same customer, for different objectives, you could create different combinations of our funds and all. So all that I would say can keep you busy for a very, very long time. But yes, we will continue to bring out some more funds for our distributors to give you reasons to go back to your customers.
Well, now I think we will be taking a 5-minute break. Hope you guys will still be here when we come back.
We're back again.
Hi guys, welcome back. Thank you so much for making it up to this point. So we will be having a few messages from our speakers. I guess let's begin with Richard.
Yeah,
a few parting words for the audience.
I think in this time of high uncertainty, it's very important to stay calm. We have clients that are very jittery, and hindi natin kailangan kabahan. During these times, we should be the level-headed ones. So how level-headed? We should maintain our market discipline. If we don't know where the market is going, we maintain our discipline. Discipline in terms of cost averaging. We put in today, some tomorrow, some next week, some next month. What is important is not market timing. What is more important is time in the market. So again, I will repeat that. Not important, market timing. Very important, time in the market.
I love that.
Okay. From my end, I think one thing that we should really communicate to our customers is the unique proposition of our product. Yes, we do business on mainly on unit-linked products, but the fact that we are an insurance company and we offer them an insurance vehicle, it is the most suitable product for their long-term funds, which is really from the time that they want to accumulate to all the way to the time that they want to give it to their children or their children's children through gifting. And in effectively positioning our products there at that space where they want a certain amount of wealth to be really earmarked, we're effectively selling our product in the right way, capturing a bigger chunk of their wealth that will come in through us through time. And in doing so, we get to experience less of that jitters. As one, we condition our customers, as Richard said, to really look at a long-term perspective and really looking at what they have parked with us or what they have entrusted to us as money that will be the last money that they're going to touch. So I think that's one thing that we should really focus on instead of trying to get portion of the business from a customer that would likely come in or out within a 3-year horizon, might as well have that discussion with the customer for them to really appreciate an insurance product.
Okay. I think some great advice by the investment experts. My advice would be always ensure that you are asking the customer what is his investment objective and what is his investment horizon, because what you recommend him is as a function of those two things. In absence, or if you don't have that knowledge and if you haven't done that discussion with your customer, then you will end up making wrong advice or advice which are not aligned to what the customer wants. That's one. The second advice is, while funds are important, and I would just try to say it again, I think at the cost of repetition of what Mara said, you are important. You are important because this is a relationship business. This is a person-to-person relationship advice business. If you are not important, trust me, the customer could have bought funds by just going into into call, which is an online investment forum or investment opportunity. He wouldn't be reaching out to you. And always remember that you get also, you earn, you get paid. So do ensure that you are in touch with your customers on a regular basis. You're building that relationship, irrespective of whether the funds are positive or negative. You are providing timely information to your customers and ensuring that you're really doing the job of being an insurance advisor. Okay, so know your objectives, know the customer's objective, know the time horizon, be there present for him every now and then. And third, invest in your own knowledge and your capability development. Yeah. If you have to showcase yourself as a brand, as a person who's of repute and knowledge, then you will have to invest in building your own knowledge. AXA, we provide a lot of training, a lot of certifications. Please push yourself into that. Ensure that there is a lot of reading material today in the market. Go out and do that. If you don't understand those concepts, ask. There is a lot of information today available and easily accessible. Take advantage of that and build yourself as a brand, build yourself as a creditable insurance and an investment advisor to your customers, and ensure that you're building that relationship. That is going to be the most important and the key differentiator as far as you are concerned.
Thank you very much, Rahul, Dexter, and Richard. Just to further what Rahul has mentioned, this is why we have set up a wealth management team, or basically wealth advisors that are here to help you. It's a very new team, and we have had a few initiatives already. Just to enumerate them before we come to a close, we have the Access program, we have the investment hotline. I'm sure a lot of you that are online right now are a part of this hotline. So it's a group of investment specialists. We have a lot of financial advisors there. We're there to help you at any given time. If you have concerns, personal concerns, client concerns, questions on the market, anything under the sun, you can send us right there. We also have investment bites, which are short videos that tackle simple and basically any topic under the sun related to insurance. We also have, like I said, investment hour. So if you enjoyed this video and found it to be informative, please do stay tuned as we plan to air this every quarter or even more frequent, depending on how often you'd like. So help us help you. We will actually be showing, or is the survey online? Okay, so if every one of you has a few minutes to spare, please do help us. Your feedback is much appreciated. All you have to do is scan the QR code with your mobile phone. Take a minute or two to finish the survey, complete the survey, and there you go. Okay, I hope you guys were able to do that. Is it still there? Okay, well then, episode 2, this comes to a close. Again, I am Mara Gutierrez, Wealth Advisor. Till next time.